So, hello and welcome back to another episode of Web3 Insights, the podcast series. I'm your host, Aaron Hayhurst, and today I'm thrilled to be joined with Stephan Lutz, who is the CEO of BitMEX. BitMEX is one of the most well-known names in the crypto space, and today we'll be exploring who they are, what they do, and the role that they play in the broader crypto ecosystem. We're also going to dive into Stephan's views on the US crypto market, following his recent insights on how it will evolve differently compared to the rest of the world. And then finally, we're going to wrap up with what's next for BitMEX and as they continue to innovate in this space. Stephan, thank you so much for coming on.
Thanks for having me, Aaron.
No, you're welcome. Stephan, for those who might not be familiar, could you please give us a quick overview of what BitMEX is, what services you offer, and the role that you play in the broader crypto landscape?
Yes, sure. Well, on the one hand, very, very easy. We are one of the go-to venues for crypto derivatives trading. So what does that mean? It means you can trade crypto on spot, buying, for example, Bitcoin outright, and then you hold them in your wallet. Or you can achieve the same by buying perpetual spot, which is the derivative of a spot trade, but with different characteristics. So you can trade with leverage, which doesn't mean you don't borrow money, but you have a different payout profile. You can trade dated futures. This is where we come from. This is our sweet spot. We have been the first in the industry basically to roll that out to a broader public. Or the market micro infrastructure, how it's called, meaning how does the perpetual swap work? What's the funding mechanism? How is P&L settled? How do you reduce counterparty risk, etc.? How is an insurance fund working? That all was invented by our founders. So Arthur Hayes, Ben Delo, and Sam Reed in 2014 when we went live. And since then, all the other crypto exchanges basically copied our model, which is fine. I mean, that's innovation, that's proliferation, that's adoption. That's good. So that's where we come from. We have evolved since then a little bit. So we have now options trading live. We have a spot market live, which we didn't have for a long time. So we did more, but we always stay true to one thing. And this is we wanted to provide a legitimate, safe, secure, sound, and neutral trading venue. So, for example, we don't operate our own market makers. We only have designated and dedicated market makers on the platform. We don't run our own treasury department on the platform. We don't commingle accounts. We don't reuse or rehypothecate funds of customers. So all the funds you hold with BitMEX for collateral, you can withdraw at any time, basically. We have a 95% coverage of proof of reserves and proof of liabilities, which we do twice a week, not just once a month or periodically. We have the largest insurance fund in the whole industry in terms of Bitcoin as well as in US dollar terms. We cover a multitude of open interest on the platform with that, basically meaning it provides protection to winning traders against the losing traders there. That's how it is. Fully rules-based. We never took money out of that. We only used it for what it was intended to do. And this sets us apart from many of the other exchanges. And then with that, we are really crypto native. Which is why we are a go-to spot for Bitcoin traders and Bitcoin maximalists, basically. We don't accept fiat money, which some people might not like, but actually that's true to our heart because we are crypto people. So I would say we deliver everything that you see, and we speak about that later, which like the more regulated, close to TradFi players offer, but for crypto native folks. This is basically what we are, where we are. We add new contracts depending on the interest in our user group. But our sweet spot really is the perpetual futures trading and now options on top of it since a couple of months. We offer tools that allow basically individuals to trade not against, but let's say at the same level as institutions. So our front end is very professional. Well, it's not as easy to understand, but it's very professional. We offer trading bots. We offer a guilds feature. We have instant P&L realization, basically meaning your P&L is settled every 10 minutes on chain. So you really get what you are entitled to get. That's us.
Amazing. No, there's lots of stuff to on offer there with your platform. I mean, BitMEX has been a prominent player in the crypto space for quite some time. How has the platform evolved over the years, and what are some of the sort of the key milestones that have shaped this journey for you?
Yeah. Well, I mean, for BitMEX itself, I joined BitMEX now like 4 years ago. And for the platform itself, I think the biggest thing was when it actually went live. because it was founded based on the experiences of our founders with Mt. Gox, which was an illicit player at that time, right? So the funds have just been redistributed or distributed out of the liquidation proceeds, right? That just happened this year. But when it happened, founders didn't want to happen that again. So, and they wanted to build a platform that took care of that, which led to all of this. So first of all, you don't just have a spot market where stuff can vanish. You do it in derivatives because it's much more efficient from a capital efficiency and even fees point of view. Number two, they wanted to have a wallet that's super secure. And this is what they basically implemented. That was at that time like only once a day withdrawals because every withdrawal was reviewed. And we have a multi-sig withdrawal procedure, which is not even MPC, it's multi-sig. It's another level of security. And it never could be operated by just one or two people. There would always be three people that needed to process those withdrawals, right? Then the funding mechanism, basically balancing shorts and longs, was a big thing, together with the insurance fund, where you basically recreate what in TradFi world is called a lines of defense model of clearinghouses, but you recreate it in a way that's much more capital efficient, not so expensive, allowing individuals to trade in a security level or safety level that's equal to TradFi clearinghouses, but without paying in like contributions to clearing funds that's in the billions, right? You just pay it with your fees basically, and your liquidation proceeds there. So, and always keeping it, not using it for something else. And then the biggest thing from my point of view was the evolution in the audit mechanism. That's how we call it. Basically meaning all the positions on the long side need to equal, or the P&L on the long side needs to equal the position on the short side. Meaning this platform can never be in the red. There are no uncovered position whatsoever. If that audit mechanism breaks, it's a technical one. It's not, there are not sitting people ticking off boxes. It's basically automatically built into the system. And if it doesn't work, it stops working. So sometimes, I mean, in the previous days, you had quite some outages in the beginning that were more due actually to those audit mechanisms. And then someone needs to investigate what happens. We don't have those anymore. So basically, we're always covered. That's why we have a high coverage of proof of reserves and proof of liabilities. And we share a lot of data on chain. Our wallet addresses are basically public know-how. If you search for it, and with the blockchain explorer, you can see what's basically on our platform. So amazing. I would say we are, and we always evolved as a centralized exchange, being as close as possible to a decentralized one, right? Because we value the crypto ethos and the transparency, and be your own bank, right, is a nice slogan. It means you need to know something. You can't be your own bank if you don't know what banking is about. That's kind of the thing. But be your own bank and enabling people to take care of their own positions, and they should fully own it. That's why we are even very cautious for staking, because if we stake customer funds, they are staked, right? Yeah. So yes, you have liquid tokens, etc., but it's still a different matter. We want to make sure that at every time, if we would go to a liquidation event, we can pay out all the funds of the customers. I mean, operationally it will take some time, but fundamentally in the next block. And this is it. Then we had I would say the last bull markets going up, mass adoption, individual people flocking to the platform, millions of accounts. That was a big thing where BitMEX founders basically led the crypto trading adoption globally, right? Then we entered into the next phase, which was like, it started for BitMEX already 2018 and 2019 when BitMEX started going into KYC. So basically making sure that everything's operated on good grounds and on legit grounds. So learning even more so, not just from Mt. Gox, but from own experience as well. Implementing trading surveillance, so to make sure that there is no market manipulation or that we can detect quite early. I mean, then of course, 2020 founders have been indicted by US authorities, actually for doing something that wasn't required at that time. But anyway, we figured that out as we have been on the way of KYC anyway already. There was an easy way out. End of 2020, we had a fully verified user base. Again, first centralized crypto exchange in the world that had a fully verified user base. And it's not just, hey, registering an account and verifying your email. It was including proof of residence, source of funds, and full identity check. Right? So since then, so we operate now in our fourth year of full KYC. And then there was kind of a time where it was a little bit silent with BitMEX. For obvious reasons, we wanted to take care of the legal stuff in the best possible way. After that has been clear in 2021, I mean, we found a settlement with CFTC and FinCEN in 2021. In 2022, crypto winter hit. So that was like with everyone, we went to restructuring, making sure that we stay profitable. This is a bootstrap company. There is basically no external funding. Founders basically own the company still.
Amazing.
So fully bootstrap operation. We have been basically 9 out of 10 years of operation. We have been profitable. We have been profitable 2023. This year, again, very good year. So those are major milestones. So last year, I would say in 2023, we stepped up the game. We overhauled our whole backend infrastructure, basically enabling us to do more than 10 times the volume we have on the platform, because we believe in more institutional adoption to come. And we want it to be an institutional grade platform. We are open to individuals everywhere where it's legal and we can go through full KYC. There are no sanctions, etc. And we want to keep that open, but we want to have an institutional grade platform. So beginning of this year, we finished more or less this overhaul, and it was very successful. We have much more reliable and very shortened latency right now, which is important for high frequency traders. We have more reliability, more throughput, and we see that being used by our institutional players on the platform as well.
Fantastic.
And then we switched into more growth mode. So going into something that for individual traders, we become more attractive. And so we went into building guilds last year, which is kind of it's not gamification. I wouldn't call it gamification. It looks a little bit like this, but it enables basically individuals to form groups and to run shared P&Ls. So it recreates the experience of sitting on a trading desk in a larger trading house. So those trading desks are not one-man shows. Basically, you have multiple people that have a 24/7 coverage. They run different strategies. They run different subbooks and sub-accounts, and we enabled that for individuals to do as well. So you can either pivot into going to, let's say, the gamified idea, or you go into the professionalized idea, and we see people doing this very successfully. Next level is UI UX overhaul, which is still on the going. We do that basically regularly, and we go into trading bots. So we just launched trading bots on a beta version. We want to roll that out further. And in the beginning of the year in Q1, we launched on options. Options trading is slightly different than perps and futures trading. It's not as easy. It's not just like flipping the coin. I shouldn't say that, but it's not like flipping the coin and betting up and down markets, or hedging yourself up or down the way, or doing a funding arbitrage trade or a basis trade. This is understandable even to people who haven't been in financial trading ever. It's easily explainable. Options are, I would say, easier to use, but more difficult to understand in terms of when you will have P&L, what is time value of money. Actually, options are for volatility trading, not so much directional trading. But what our offer, where we differentiate from the other offerings, is we are very friendly to individuals. So we have a large set of coins that you can buy options on. Number two, it doesn't look as liquid as a perps market or a futures market, but actually it is, because we have an RFQ functionality, which means that if you want to enter into an option, but there is no order book price, you can request a price and then say for yourself whether you want to opt into that or not. So we work with partners together to make that happen. And we are much more, we get even from institutionals the feedback, much more price efficient than all of the competitors out there. We have lower lot sizes, lower tick sizes, even enabling you to take an options position for the value of $10, which no other platform does. So we are, I would say, experiencing that we believe we have a way better offer in terms of technical specifications, but we need to improve still the look and feel and the user experience to make sure that our old option or old futures and perps traders are able to understand what they trade. So this is basically it. This is where we are with all the inflection points. I mean, I would always say I'm in crypto, and I went into crypto professionally, not just personally. I'm in crypto for long, but professionally, because the interesting thing is every 6 months there's something else. The cycles in crypto are so quick, so short. Basically, they're short, short cycles. So it's not like something happened 5 years ago and that is basically it. I mean, you can tell like every month something is happening and something is important to the whole firm. So it's really a nice ride, and for us and for our customers.
Yeah, for sure, absolutely. I mean, there's some really credible milestones that have taken place there. It's great to hear, especially during the crypto winters and the down markets, that you're still able to run a profitable business, which is fantastic to hear.
Yep.
Recently, you shared some fascinating insights on how the US industry will follow a different path from the rest of the world. And it's a really good article actually that I read through, which is, what sort of prompted me to reach out. Can you elaborate on what you see as the key differences in how the US is approaching crypto regulation and adoption?
No, absolutely, and this is close to my heart, not just in my role, but personally, and it
Amazing.
relates. Let me allow this 30 seconds, 1 minute. It basically goes back to how I got into crypto. So my background is basically 20 years TradFi. I worked in a bank in various positions. I worked even at Deutsche Börse, which is Europe's largest stock exchange operator, including the Eurex brand, which is the derivatives trading side of things in the clearinghouse. I worked 10 years with PwC as their lead partner for capital markets in continental Europe, so ex-UK, but all the rest of Europe in the advisory business before I joined BitMEX. But I went into crypto, I'd say, very early. So 2012, I mean, I'm not like with the white paper stuff, but in 2012, first time I looked into blockchain technology for how it could change the financial infrastructure. At that time, I couldn't use it professionally, but I was still interested and very curious for the technology. I put that aside for a while, and then I did a lot of advisory work in Southeast Asia in particular, as well as in South America, around financial stability, because I was very much involved into, I would always say, like cleaning up a little bit after great financial crisis with too big to fail regulation, recovery, and especially resolution of banks, and all of that stuff during my PwC time. So, but I came here, I did like financial stability, advisory work, even for central banks, and a lot of, you would call it nowadays, like financial inclusion projects. And what I noticed coming from Western Europe, you need to say Western Europe, the most overbanked population in the world. Everyone's got a bank account. You have a right to participate in, let's say, financial markets if you have funds. So no bank can reject you having an account, and everything works. I mean, you can complain, but it works. In Southeast Asia, I spend a lot of time in Indonesia and in Malaysia, and they are not particularly developing countries, actually. They are more tiger nations. But like 1/2 to 2/3 of the population doesn't have access to bank accounts, just accounts, not even financial markets. And they will never get that. Not because they are bad people, bad actors or whatever, but because the whole infrastructure isn't geared towards it. So they won't get, let's say, passports. The thing of proving your residence is quite cumbersome for various reasons, and it won't change. At that time, it wouldn't change, and even now, it won't change in the next 20 years. So, but they all are somehow connected to international trade flows. They are very internationally. And at that time already, that was like I mean, it's not ages ago, but it's 10 years ago, a little bit more than 10 years. And they all already had smartphones. And that brought me back, I would say, into crypto. And I'm like, wait a moment, there is something. It's like proof of identity, is transfer of value, store of value. You can have the DAOs, the DAOs. I mean, for me, it's just a digital twin of a cooperative, which is quite known in Europe in particular. Cooperatives are very well known. I'm like, wow, that's really something. Since then, I've been into crypto. So now back to your question. Sorry, that was a long introduction.
No, fine.
You where I come from. So if you're in Western Europe or in the US in particular, you look at crypto more as a kind of an investment asset. It is more like, okay, I've been to tech stocks, I've been to biotech stocks, wherever you are, whatever you want. Some people invest into T-bills, just risk-free and stuff. But they look at crypto more as means of investment. So they don't look at the, I would call it, core use cases. Hardly anyone in Europe, and even less so in America or in the US, will use Bitcoin or even Tether as a means of payment or Circle. They might do so, but only to a lesser extent. They look at it like, what's the price fluctuation? Do I want to take a risk and invest something? Do I want to hedge myself against inflation? So actually, it becomes another investment asset, another asset class, so to say. And
Sure.
with that, and you see that in the regulation usually tries to, from my point of view and my background, to treat it as, well, it's another, not security, let's not get into this land, but like another asset. It's like securities, commodities, FX, which is currencies. Okay, it's neither of those. So yeah, let's just call that, I mean, they don't call it even crypto. Let's call it crypto. And it's just like that. And then the industry evolves in a way that even the crypto native players of those in those jurisdictions tend to become more and more lookalikes of TradFi institutions. They use a different underlying. So, for example, if you trade equities and you will then trade commodities, you won't use the same infrastructure because commodities are inherently different and they are traded on different systems. And with crypto, we have exactly the same. But they become more lookalikes. Why? Because the service that is provided is investment. That's it. With all good and bad things about that and so on and so on. But if you are in, I would say, non-US, non-Europe, crypto is much more than this. This is an angle too. Of course, people hold crypto to invest and to have capital gains or appreciation in prices, but much more, they actually use it, right? They use it for payments. They use it to earn, like the whole Web3 thing is more a thing outside of the US and Europe. I mean, it's developed in the US, to a minor extent in Europe, technically, but it's used over here in Southeast Asia, Africa, South America. So, and this is why I believe those markets will quite pivot a lot or bifurcate. I call it, I think, bifurcation. Because in Europe and the US, regardless of what any election will give you, it's more a matter of timing and how long it will take. But crypto will become another investment asset, and you can access it at some point in time, still way to go, via classical TradFi banks, or you access to the new incumbents, so to say, like the Coinbases of this world. But it's more or less the same as if you would go to a bank. And all the access requirements are the same. This is, for example, if you look at Coinbase, Kraken, good names. I really love them, but they become like the institutional lookalikes of a Morgan Stanley and a New York Stock Exchange. And if you look at their client bases, their trader bases, it's already on the making, right? And the regulation even will accelerate this because it will set access requirements. It will set requirements on how you can market it, how you need to keep the assets, which is all good. I'm not even against this, but it's not catering to the need of those for which crypto originally was, I would call it, invented. It was invented to be your own bank. So to enable myself to take care of my financial, maybe not freedom, but my financial wealth. So I have my vault in that device, right? And then I can go to a DeFi platform, I can go to centralized exchange, I can lend it, I can borrow it, I can use it as a means of payment, I can prove my identity with it if I want to, which is quite an interesting thing and not really thought through, I think, by many people. But it's really a case. I can build it into Web3 applications for you earn stuff right on micropayment basis. That's actually the thing. The thing is not that someone goes on the web and just work on the web. I mean, this is Web 2, this is Web 1. You could have done that already. The real innovation is you can have micropayments that are still efficient because you can't have micropayments with fiat infrastructure. You just cannot. I mean, it starts already if you're on public transport and you need to settle via your credit card a payment of 50 cents or so. This is inherently inefficient. If everyone would do that, it wouldn't work and your fees would be so high, but you can do it with crypto in a much more meaningful way. And you can do it decentralized, which is another thing of web. It just means you're not centralized and one player says how the books and records are kept, which is like in banking the case. I mean, you have the banks and they say who owns what. It doesn't mean they do it in the wrong way. I don't want to go down that rabbit hole. I have some convictions about that, but it's not for this podcast. But this is it. And it comes at the price that you can't decentralize. You can't have sub communities that maintain their own independence. With crypto and that stuff, you can. You actually can.
Yeah.
In a way that's safe and secure. It's not like stuff gets lost in the middle and all of second you have, like, because of the fractional system, you have mismatches. No, you all can do that rules-based with smart contracts, with self-auditing mechanisms, and that's the real innovation. And this is something that is more appealing to the rest of the world, so to say, right? Where you don't have access to banking system, where you don't have good regulation. We can't even discuss what good regulation is, right? But where you have less consumer protection, for example. And I don't mean it on paper, I mean real consumer protection. The issue nowadays is most of the countries have good regulations on paper, but the question is, do you trust them? This is it. So crypto can provide an alternative. I don't think that it will replace it, but it can be an alternative. But the alternative is more useful to places where private initiative is worth more than public initiative. And that gives you, like, this is where, I mean, not the country I'm sitting in right now. This is basically an island. But if you see the rest of Southeast Asia, I think the private initiative can yield a lot. It's about micropayments, microstructures. It's about decentralization, because centralization doesn't work in this place of the world. And this is why I believe it will bifurcate. You will see that more and more that US and Europe will tend to be investment markets for crypto. So it's basically, I would call it the buy side, whereas the rest of the world will look at crypto and the technology more to spur economic growth, to really have production use cases. I call it productive use cases, where you create additional value. Investment is allocation of value and allocation of wealth. And I believe that the real crypto use cases to create value actually will be more in this part of the world. And that you see in regulation. And depending on who is going to be elected in the US, it's a matter of how fast that will go. And for example, you see, and then I stop for a moment and let you have more questions. The interesting thing is that on crypto, the parties in the US agree much more than they disagree. We are often mistaken by the statements of individuals, but if you look at what's going on stablecoin regulation, complete harmony. They just passed.
Yeah.
There was no conflict. And even on investment, it's not that Democrats will say you shouldn't invest into it. It's more like they're more on the consumer protection side of things, whereas Republicans are very laissez-faire on all of consumer protection, because they say, hey, be your own bank. You're responsible for your own wrong or right doing, right? Which is a mental thing. But it has nothing to do with real regulation from my point of view. And even now with the change in Kamala Harris posture, I would call it, you can't even distinguish between this anymore. There will be differences, but it's more a matter of how laissez-faire compared to how much regulated it will be, and how fast adoption can spur. And not so there is an effect, but I don't think it's like a 0-1 thing. It's more like on a scale from 0.3 to 0.6.
Yeah, no, for sure. But I mean, I find your viewpoints on that really fascinating and credible. I think it's such an interesting topic for sure. What do you think are the biggest challenges for crypto companies operating in the US right now? And conversely, where do you see the biggest opportunities, especially as the regulatory landscape continues to evolve?
Well, again, this is personal opinion more than I don't want to be that misread as, hey, here's a statement speaking for someone, right?
Sure.
But my true belief is you can be in crypto in the US or out of the US. That's it. Why? And it's not meant as a bad thing. If you look at how the US works in financial services in general, it is quite bespoke. It is a very organic system. And you need to be on the ground. So you can't work in the US markets and financial markets by having basically non-US headquarters. Or you see that even in TradFi. All the big players, they have subsidiaries in the US, but those subsidiaries work more or less like standalone entities. They have better connectivity to the outside world, but they really work like US operations. It's not a branch office. It's not a subsidiary. It is really something quite independent. And in crypto, the same will happen. You see that already. If you look, for example, at Coinbase, they have their US operations and they have their offshore markets, which are formalistically headquartered. I think it's in Bermuda, if I'm not mistaken. I always confuse Bermuda and Bahamas, but I think it's Bermuda. And those are separate entities. They're run on a separate level. Why? Because the US entity need to concentrate completely on what's going on in the US. You see the same actually with Circle. Circle has its European operations, so to say, but basically Circle is a US operation, and that's how they position themselves. That's actually why you have that bifurcation again between Circle and Tether. You could say it's the same product. Why do you have two, and why do you have real fans of Tether and real fans of Circle? It is because Circle is a US operation, Tether is a non-US operation, right? And that then will lead to basically different customer groups, and this will happen more and more. And basically, the same is true if you're a real crypto firm operating, for example, somewhere in Asia, and you don't want to have that completely standalone, separate, independent US operation, you won't go to the US, full stop, because it's too cumbersome. It's not worth the effort. The US is one of the biggest markets, and it's a shame that you can't do it, but it's regulatory and legal wise created in that way. So you either play US by 100% or not at all. That's basically it, which is like just a political decision, but it is the same as in TradFi markets, frankly. So this is why, again, I'm coming back to that. Hey, this is how it will look like at some point in time. And you see basically all the big players doing exactly this. Even the European crypto players don't play in the US, which they could do because they are much closer to it. But the further away you go from the US, the more difficult it becomes. And hardly anyone can afford to have two completely standalone operations. Only the biggest players in the world can do that. I don't complain about it. It's just a matter of fact. Full stop.
Yeah, absolutely. Yeah. I think that brings on to the next question quite nicely, actually. As someone who operates on the global market, how does BitMEX balance strategies then between the US and other parts of the world where crypto regulation and adoption might be more favorable?
Well, first of all, and this is not a secret, we don't accept any US customers. We don't operate in the US, and we don't operate for US persons. So this is how we do it. We just want to make sure that we're legitimate on that level as well, and that we make sure we do only legal stuff, right? We don't want to do illegal stuff. So our legal and compliance framework and with the KYC is quite strict to make sure that we even filter out bad actors on that one who want to disguise where they are and stuff like this. So we are really strict on that one, and we do that on the same level for stuff like sanctioned regimes. We do that for politically exposed parties and so on and so on. So we really try to, I wouldn't even call it striking a balance, because there is no balance to strike, but we have something that we say we don't touch this, and the rest then we look at it on an individual case-by-case basis. But again, it's always around how can we maintain our legal posture, which is about making sure we act in the realm of legality in all the jurisdictions we accept customers from. So we basically, sure. And this is I think the biggest change of BitMEX in the last 10 years in terms of commercial viewpoint. So where BitMEX was big in the beginning, and it was basically open to everyone, which was just the time in crypto. That wasn't even illegal. That was completely legal based on the regulations and the non-existing regulations we had. And it was open to all. The moment that wasn't possible again, we turned ourselves more into, bad word, but niche player, right? Because we are here for people who know something about trading. It's not like my mom and my dad wouldn't be on BitMEX if they would be interested in crypto trading. I wouldn't even advise them to do that, right? Because it's one step higher than this. I mean, I come from that world, so it's like, yeah, fine. So it's like you could say, like, the mindset needs to be the one of an accredited investor. I mean, we don't have those formalistic rules, but we look at that. Absolutely. And then we work more or less on the basis of, you call that reverse solicitation. So we are not actively marketing. I mean, of course, we have offers ready. We welcome new customers, but we don't go out. We don't advertise. We don't do any sponsorships anymore. We say, hey, if you want to trade on BitMEX, you come to us. We look at whether you're eligible to trade on the platform, and if yes, you can do so. full stop. That's basically it. So we operate much more than a Eurex derivatives exchange, like a CME, like an ICE, where it's exactly like this. They don't go out and market their service. Everyone knows that they are there. You go, you see whether you can apply. Let's say it's not an application, but whether you can onboard. If it's possible, you onboard, you trade, full stop. So which is another major difference to, especially I would say, the Chinese run exchanges, which are marketing machines, and they are. I mean, my full respect to those guys. It's amazing what they have built in the last, I would say, 6 years or so. Amazing thing. We don't do that too. So, which is like we have all the tech available, institutional grade platform. I mean, I knock on wood. I mean, I don't want to market that, but we never lost a coin, because you only can say that until it happens. We make sure it won't happen, but still, you never know. But we are fully neutral. We're doing basically, we provide just a service so that people can come together and you have undisturbed price discovery. Not everyone likes it, because undisturbed price discovery means you have spikes and you see what's happening on the market. Some people mistake that with illicit activity, because they might think, hey, everything should be predictable. Actually, free markets aren't predictable. And that's what you see on BitMEX, which we are proud of. I'm proud of that this is there. But it gives you a hint why we're not here for, let's say, everyone. You could say,
Yeah.
like New York, if you can make it here, you can make it everywhere. But
No,
not
it
the other
makes
way around.
yeah, it makes complete sense. I completely get it. Looking ahead then, what's next for BitMEX? Are there any exciting developments, new features, or partnerships that our audience should be looking out for? And also, are there any sort of specific areas for you guys that you're innovating, or BitMEX is looking to expand as well?
Yes, I mean, there are a couple of items we look forward to, and some of them are quite technical. So first of all, we are working on something that's called multi-asset margining. It's actually something pretty old in the industry already. FTX I mean, I don't want to talk about FTX, and it wasn't real, but they started with that. What does it mean? It means if you want to trade crypto derivatives, you need to place collateral, right? As collateral. And so far, we only accept Bitcoin, Ethereum, and Tether. And we want to broaden that universe. And we want to make sure that, for example, for a Bitcoin margin contract, you can place collateral in different currency. We will go live with that in very due course, actually, but with a limited set of coins. But what is the good thing about it? It provides capital efficiency. You don't need to trade in and out of coins to provide collateral, and you can even use interest-bearing stable coins for that, which then gives you two things. You can trade with them and you earn interest at the same time. And we want to broaden that universe step by step. It takes us longer than some of our competitors, because we want to make sure, again, what I said in the beginning, it works all the time. We don't want to be caught, let's say, in action and then see, oh, something went wrong. No, we pre-think whatever we can pre-think of market condition, what can happen, and it should be fully rules-based instead of some people in the background doing manual work, because we believe that's what crypto is about. I mean, it needs to be rules-based, predictable, reliable. And all of that, in a good market situation, everyone can do that, but we want to be battle tested. We are now through 3 crypto winters. We have basically survived all the breakdowns in the market so far, and we want to survive the next one too. This is where
Awesome.
this is a Mount Gox experience of the founders, which fuels this ethos, right? With that one, I mean, you just need to believe me, it's more complex than it sounds. It sounds pretty easy, but the moment you say, hey, if you would expect like 10 coins, it's a 10 to 10 matrix that you need to technically do, and then you need to be able to settle this on chain. This is why it took us longer. So, but this is just back-end capital efficiency, making it easier for new traders to onboard the platform. If they don't have Bitcoin, but they have something else, they can use it. Great stuff. Number 2, we always look at our leverage. I mean, leverage is like a word I even hated. I think it is used by the industry because at the time when it was invented, there was no better word for it, because leverage usually in the TradFi markets includes lending. There is no lending involved in leverage on our platform. We don't lend money. There are no margin calls. You can't lose more than you place, and so on and so on. It is just what payout profile you get. It's more of, do you have an accelerated payout profile? Do you have a decelerated payout profile, and you can set that. And we want to have more optionality there, basically going to more than, and I hate to say that because it's often mistaken, to more than 100 times leverage. That is really what it's about. But it's about payout profile, not about lending or getting people into losing more money.
Sure.
Then we work on our options design. Actually, we went live with a partner with I would call it an MVP, a minimum viable product. It works well. The RFQ model works, but like the UI UX is still in development, and giving people more options, like the options to trade. Say, if you go for that option strategy, this is what you can win, this is what you can lose, so that people not go in and need to create their own lags, which is, if you're a professional, that's easy, you want that. But if you never have done that, you just want to say, what's my payout profile graphically? What does it cost me? What can I win? What can I lose? And then give you like tiles and say, are you interested in trading those? And then basically automating this. I said earlier, we went into bots. We had our beta version went live just shortly, so we are in beta testing. We want to broaden the universe of bots you have. Bots sound weird. What is it actually? For me, it's pretty easy. If I'm an individual, I sit in front of the screen and I trade and I want to make money with it, I need to sit in front of the screen. But I might have more semi-automated or automatable strategies saying, hey, if, for example, we have an overbought or oversold market, I want to take the opposite position. And you can automate that. So basically, my trading terminal can work for me while I'm away from the terminal. That's what it is. I mean, it is trivial and mundane even. It's basically automating what you want to do. So, but the difficult thing is to provide the ability to calibrate in a way that's suitable for you. So we will broaden that. And we will go live with something that others had before, which is like social/copy trading. Here again, it took us a long time to get into that because we want to get it right? You can always have that as marketing and saying, hey, Stephan Lutz traded, and you can trade what he trades. But if you think about it, it can lead very easily into and it's not market manipulation, but you have this lemmings effect. So if everyone does the same, yes, of course it goes up, but it goes down again. So it's a little bit weird. We want to get that right and in a better way, in a BitMEX way, basically. That will go live. I mean, due course is like in the next 3 months or so. And we work on the back end on that one. And then constant overhaul of infrastructure. We look into third-party custody, which is more interesting for our institutional players, where you can have self-custody instead of custody for your collateral with the exchange. That's what's coming too. And we work actively now on getting more liquidity on the platform for, let's say, the coins that come after the main coins. The main coins are very liquid, like the Bitcoin, Ethereum, Solana, the really big ones, the biggies in this space. Let's say the next 10, the next 15 are always of a concern, and we want to get the liquidity without trading against our customers. Again, that takes a little bit more time. We could take the positions and the risks ourselves. We don't want that. We want to be a neutral exchange. So it takes us a little bit longer, but there we see improvements coming in the next 3 months as well. So I believe that BitMEX in January 2025 will look much different than in October 2024.
Amazing. Some exciting stuff going on there, which is great to hear. Just to finish up then, as the crypto landscape continues to evolve, I'm keen to get a really quick insight from yourself about what role you see BitMEX playing in the broader Web3 and decentralized finance ecosystem in the next few years.
Yes. As I said earlier, I think BitMEX will be a niche player for a big niche. And the niche is, you want to trade reliably, safely, securely on a platform that is not taking position against yourself. Then BitMEX is the go-to platform, number one. Number two, it will be, and it should be, the platform you think about that is a centralized exchange, but it is as decentralized as possible. What do I mean? DeFi platforms are great. They're very well suited if you do one thing all the time, all of the day, because then you become part of that cooperative. I always call them cooperatives. And you do one thing, but you take care completely on your own. You're in charge. There is no one else accountable for it. There is no customer support you can call. There is no one taking care of you. But if you, let's say, want to trade to make money, you don't want to take care of all the rest. So you might want to have a centralized exchange that has a lot of the characteristics of a DeFi platform, meaning giving control to users, making sure we don't misappropriate funds, we are neutral, etc., etc., etc. But you have a customer support that you can call. So we are very proud of not hiding. So everyone who trades on BitMEX knows our customer support. We're very proactive, 24 hours coverage, 24/7. You can even call me. If you have my contact, you can call me. And it's not so difficult to get my contact, right? I'm not hiding somewhere. People know where we are, which adds to the legitimacy from my point of view. So our people are where they are and everyone knows where they are. So this is it. So if you want to have a crypto native, crypto ethos company, very transparent, neutral, but providing service, then you're with BitMEX from my point of view. And we will see more adoption from the more institutional space. I expect that asset managers will come onto the platform. We see family offices interest. I mean, they don't speak about that and they don't want to be spoken about for obvious reasons, and that's fine. But we see this. So as I come from TradFi, you always have the delineation between sell side and buy side. Sell side being market makers and the ones who enable trading, and the buy side are the investors. I mean, not long only, but the investors. So what crypto has is the institutional side of crypto is very sell-side-ish. It's market makers, HFTs, arbitrageurs, etc. And the buy side, the actual investor side, is usually individual. I don't even call them retail, but it's individual. So I believe that we will see more evolution of the institutional side on that buy side level, and this is where would be and is our sweet spot, because that's how BitMEX was developed.
Amazing stuff. Thank you so much, Stephan, for joining us and sharing your thoughts on the future of crypto, particularly in the US market, and also what's next. Sorry for BitMEX. Slightly longer episode than I normally do, but I'm happy. I'm happy for that because it's incredibly insightful, and there's a lot of interesting conversations to be had there and had there between us. It's been fascinating to hear about the platform's evolution and the strategy shaping the future of crypto trading. For our listeners, if you want to stay up to date on BitMEX and their latest developments, please make sure to follow them on social media. Check out their platform for the latest updates. As always, don't forget to like, share, and subscribe to Web3 Insights for more conversations with the innovators driving the future of Web3. Thank you very much for tuning in, and we'll see you in the next episode. Thanks, Stephan.
Thank you, Aaron. Speak soon.